What's up, guys? Jeremy here from school.com/financial coaching. I want to illustrate for you a few ways that you are probably overpaying for car insurance, or at least could be saving money on car insurance, and also help you maybe kind of question, why are you paying for more car insurance? Now, you probably haven't thought about it recently, and that's an important part to highlight, because the things that you don't think about are the easiest ways to save money. You only thought about it once, and then it's just been billing you ever since. Those are key ways to save money, because it's like money that's almost being taken from you. And probably when you first set up car insurance, you didn't even know what to think, right? You just did something. And so maybe you got some super expensive insurance. Hopefully not super expensive, but regardless, let me break down the couple ways that you can cut costs and help you understand maybe the psychology behind it. Obviously, you can do what you want, okay? But one obvious way is with how many insurances do you hold. So you need to have, right, this minimum coverage, liability coverage. And that's kind of like baseline. That's what insurance costs, and you could get it cheaper at X, Y, and Z place, another place. I've always used Geico. I think they're a little cheaper and a little better claims history than some other people, but you could probably get it cheaper other places. You could probably pay more at other places. Allstate, I'm sure, would cost more. If you're paying for Allstate, then you're not just with insurance companies. You need to value, like, man, this is going to zoom out. This is going to zoom out too far. But when you're paying more for the same coverage at a different insurance company, some of what you're paying for is brand, but hopefully you're paying for a higher touch, higher customer service, higher availability. Allstate normally has more physical offices. You could go in and talk to someone in person. And also, hopefully, they are a stronger company financially. And so there's less risk of them somehow defaulting on your insurance, or they hopefully have a better claims history, like they're more likely to approve your claim. Whereas if you got the very cheapest mom and pop insurance company you could find, you might be at risk of, like, if you actually needed that insurance, that they don't actually provide you anything. And so there's a scale that is your decision as far as where do you land there. But certainly, if you're paying for a high-touch insurance company and you really just need insurance, maybe that's one way you could save money, is switching companies. But that's not really the focus here. The focus is, what other insurances are you carrying above that minimum liability insurance? And the two you could have are collision and comprehensive. Basically, if you get in a wreck, would be collision, and then comprehensive would be like, hey, if someone steals your car or something from your car, or some other like natural disaster event happens, like your car gets damaged but it's not from a wreck. Those insurances cost a lot more than the general liability, and most people get them, and you really just don't need to get them, is really the point of this video. But we can break it down a little bit further as to why. Now, a lot of people get them because they think, like, convenience. Hey, what would I prefer? For me to have to pay for well, let me separate convenience from finances. Okay, convenience is like when things need to happen on my car, there's this convenience factor that the insurance company will take care of it for me. And then there's the finances thought of, hey, if something needs to happen to my car, then I am safe financially. And let me boil those down real quick. The convenience one, I think, is it's a false promise, because no matter what, it is inconvenient. It's inconvenient no matter what. It's inconvenient to have to file an insurance claim. It's inconvenient to have to wonder if an insurance company is going to fulfill the claim. It's inconvenient to have something happen to your car, period, regardless of who's fixing it, right? It's inconvenient, and life is inconvenient. Even if your car never had any problems, and like some other part of life would have problems, like inconvenience is a part of life. It doesn't make sense for you to pay money every month to try to save you inconvenience and try to buy you convenience, especially with events that are out of your control by and large. The financial part, I want you to understand, of course, obviously, if tomorrow your car gets totaled, then yes, financially you'll be better off if you have the whole thing covered and you get to get a brand new car for free or whatever. Like, but the point is the insurance company is charging you more than the cost of your car replacement, like on average, right? So if you know that you are, or you just have this belief system that you're the most unlucky person ever, and unfortunate things happen to you, and you get in car wrecks all the time. If that's you, first of all, insurance probably costs so much money that you can't even afford it if you have that crazy of a wreck history. And if you don't have that wreck history, then it's like, why would you pay a premium? Like, I'm trying to, statistically, it's not very likely that you would need, like, let me keep it simple. The insurance company is a for-profit company. So they need to charge more in premiums than the average statistical, probability that they need to pay out to anyone that's paying premiums. So if you were to take that money that you were just paying every month to the insurance company and you were to invest that money, then guess what? You would have more money. You would end up with more total at the end of the day that way. And it's a great way to save some money. Hopefully that makes sense. Financially, you're better off if you don't pay for collision and comprehensive on average, statistically, right? There could be examples where you end up worse off. And so the question really is, if my life depended on it, what would I do if my vehicle was wrecked? Like, if my life depended on it, would I be okay? And for almost all of us, the answer is yes, you would be just fine. Like, if your life depended on it, you couldn't find someone to let you borrow a car for a little bit, or you couldn't find a super cheap car and salvage your car for the scrap parts and get something for it. You know what I mean? Like, if you had to, you could. And so I had to move my phone angle because the sun's beating down on it. So here we are. And that might sound extreme to say, like, oh, if your life depended on it. But what I'm saying is, like, you can't, at level 1, you can't afford to, like, not. You're trying to save money. So, yeah, it's going to be super inconvenient if something negative happens to your car. But life is inconvenient, and it's not really super scary in terms of, like, am I going to be okay? And guess what? Every month that goes on, it gets less and less scary because you're putting more money away. You're investing more money. Your investments are growing. And all of a sudden, you're like, shoot, if my car got wrecked today, like, I'll just go buy a nicer car cash. Like, you're not that far off from that, but we need to cut costs from just your overall day-to-day cost of living in order to build that margin to then be able to self-insure really sustainably. If you can self-insure financially, that's going to be optimal compared to you paying insurance companies to insure your life for you. is you know your risks better than they do. You know your driving habits better than they do, your health, your whatever, better than they do. So insure yourself. And if you can't afford to insure yourself based on just only the money that you already have to your name, that's okay, because you might be able to insure yourself through people that love you, close friends and family that might help you. Like, just if you really were SOL, out of luck, like, could you meet your transportation need without the car that you're currently driving? And the answer really is yes. Like, it's almost always yes. And you might have to get a little more creative, whatever. But again, it's the cost of taking your life into your own hands. Is you get to be the one to figure things out. You get to have creative solutions. You get to make plays, make decisions, make money, because you're taking more and more things out of other companies' hands and putting it back into your hands because you can do it better. So, long-winded, but that's a huge way to save money on car insurance, is drop comprehensive and drop collision. And a couple of the things I'll mention on there really quick. Well, it's just like the value of your vehicle is deteriorating. And so again, every month that it goes on, you're paying the same for insurance, or sometimes your insurance even going up, but the value of what you're insuring is going down. And there's always beaters out there. Like, transportation is very replaceable. I'm not saying you want terrible things to happen, but that's the other important part to reemphasize, is terrible things probably are not going to happen. They're probably not going to happen. Okay, now liability. One thing I want to talk about here is how much is your coverage. So like, you can select, okay, if you have liability, like you get in a wreck and someone else is injured, how much of their medical bills are you going to cover? And you can select the minimum, or you can be like, I want a coverage up to $1 million. Here's the thing, guys. The less money you have, the less liability coverage you need. Because what are they going to do? Like, are they going to sue you for the no money that you have? No. That's why, like, at the very low end of the economic tier, like, they don't even have car insurance usually. Like, and so, oh man, it was an uninsured driver. Bummer. Like, and I'm not saying be an uninsured driver. I think you should obey the law, but take the minimum. Now, the more assets that you have, or someone that could somehow be liable, if there's someone that you let drive your car or something like that, like, and they have money, I don't know. I mean, it's their fault if that happens. Like, you don't need a bunch of liability coverage because you don't have a lot of money. Now, if you have a lot of money, then you can decide, do you want to put that money at risk in the case of this fringe scenario that, someone gets in a wreck and is significantly injured and expects you to pay for all those costs, If you can afford to self-insure financially, statistically, it's still better for you to self-insure. But if that type of doomsday scenario is too scary, you want to pay a little more and you can afford it, because now we're talking about a different type of tier and a different level, fine. But at level 1, again, this isn't the luxurious life. This isn't the safest place to be. This is the Wild West, and we got to get scrappy over here. So you want to take the minimum coverage for most people. Lastly, the deductible. A lot of times people take a really low deductible, again, because they're thinking for a convenience perspective, like, oh man, if I had to pay a bunch of money for my car, would I rather pay $100 out of pocket, or would I rather pay $5,000 out of pocket? Oh, I'd rather pay $100 out of pocket. But here's the thing, that decision costs you $100 every 6 months. Like, you're already paying it out of pocket again and again and again. Whereas it's very unlikely that you would ever have to pay $5,000 out of pocket, because the events we're talking about are unlikely. Now, and the other aspect, again, if we're not talking about convenience or finances, and now we're talking about, but will I be okay? yes, if your life depended on it, like you will find the funds. Like no one in your whole life, no bank, no institution would lend you $5,000. I mean, hopefully you had at least some dollars to your name, right? And what I'm saying is, unless you change your insurance today and then get in a dramatically horrible wreck tomorrow, then every month after you change that insurance, it's building a bigger and bigger nest egg for you. Like it becomes a more and more obviously positive decision, particularly if you're stacking it with other areas of frugality as well. But the point is, it pays for itself quickly. And if you really wanted to, then okay, fine, focus on different areas of frugality first until then you had the $5,000 in the bank, and then you could drop the insurance deductible. But I would do it sooner. I mean, that's just me. Again, one, because it's unlikely that anything happens anyway. Statistically, you're better off. Like you'll make more if you get low insurance and invest the difference. But also, even if it did happen, you would be okay. Like someone somewhere for some interest rate, like you will get your transportation figured out, right? You like the liability, like as much money that someone's going to come after you for, like they're going to come after you for. And okay, great. Like those would of course be horrible scenarios. And I guess the last point I'm trying to emphasize, well, let me finish what I was just saying, is even in those horrible scenarios, comma, and you would be okay. You would be okay. And guess what? Horrible things are supposed to feel horrible. So don't get so much insurance that a horrible situation is actually a really good situation, because that's just going to confuse your body. Like your anxiety and your trauma is not going to agree with your finances, and it puts you at a conflict of interest with yourself. It's just kind of weird. It's supposed to be horrible if something horrible happens. But something horrible will probably not happen. It will probably not happen. And so, why not take that money and put it towards something that probably will happen, like asset values appreciating over time, your own self-development improving over time, etc., etc. So, I feel like I could still take twice as long to talk slower and really boil down these points, but hopefully you guys are tracking a few key ways to save on car insurance. Maybe change providers, drop comprehensive, drop collision, lower your coverage amounts, and raise your deductibles. If you're on level 1, a car, I mean, there's so many cars out there. There's only one of you, but there are so many cars. So don't don't mortgage your life based on the convenience of a car. But instead, let your car be the one in the inconvenient position, and you be the one in the strength position. All right. Talk to y'all soon.